Good evening, everyone. I'm Brian Trumbore. That was the Stones, of course. I have a lot to cover tonight. Tuesday, November 20th, nightly review being taped about 4:05 p.m. Eastern Time. It's about Bernanke, Hewlett-Packard, and insider trading, but first, the Dow Jones was down just 7 points. Late day comeback to 12,788. The S&P 500 and NASDAQ were largely unchanged. Gold closed at $17.27. Oil at $87. Giving back the gains of yesterday due to possible truce with the Gaza crisis. Get to that in a second. But the 10-year Treasury broke out of its narrow 158, 162 yield range to finish at 166, yield of 1.66%. Housing starts in October rose to their highest level in over 4 years, since July 2008, to an annualized pace of 849,000, compared with a year earlier. New home construction was up 41.9%, again over last year. That's good. The low for housing starts was 478,000 in April of 2009, and here we sit at 849. But the average, historically since 1959, is more like 1.5 million. So we have a ways to go. In the Eurozone, as I speak, finance ministers are still trying to decide whether or not to give Greece its next tranche of aid from Greek bailout 2. I'm seeing new figures of as much as 44 billion euro, though it's thought to still be about 31.5 billion euro. The European Commission and IMF continue their dispute on extending the target date for Greece from 2020 to 2022. That's the target for them reaching 120%, their debt level of 120% of GDP. The IMF is in a bind because its emerging market shareholders have long criticized the IMF for unrealistic Greek scenarios. And approval is needed, assuming they approve 31.5 billion euros tonight. Approval is still needed from the parliaments of Germany, the Netherlands, and Finland. And it's possible Greece won't receive any funds until December, and we've all been told they run out of cash like next week. Meanwhile, France suffered a second downgrade of its sovereign debt rating by Moody's, removing its AAA rating after S&P did the same in January. Moody's downgraded to AA1 because of France's multiple structural challenges, including its gradual sustained loss of competitiveness and the long-standing rigidities of its labor, goods, and service markets. It added that the country's fiscal outlook was uncertain, and its ability to resist future euro area shocks was diminishing, and I would agree with that assessment. Okay, before we get to Bernanke, HP, and insider trading, the situation in Gaza is fluid. Supposedly a ceasefire is imminent, a calming down period, with Egyptian President Morsi leading mediation efforts. Israel supposedly has put plans for an invasion on hold. An Israeli soldier was killed today by a rocket fired from Gaza. The Palestinians put their death toll at 129. Remember, 3 Israelis were killed earlier. 150 rockets were fired from Gaza today. 5 Israeli soldiers were wounded in one attack. Hamas and Islamic Jihad and others have fired at least 1,000 rockets at Israel this week. And thankfully many have been intercepted by the Iron Dome defense system. But Here's something. Hamas summarily executed 6 people today, this afternoon, after accusing them of being Israeli informers. One eyewitness told AFP news agency, quote, "Gunmen in a minibus pulled up in the neighborhood, pushed 6 men out, and shot them without leaving the vehicle." Okay, Ben Bernanke, he gave a speech today to the New York Economic Club, lamenting that what for the U.S. economy had been growth of 2.5%, or what's known as the potential growth rate, 2.5% a year at full employment without generating inflation, has been more like 2%. Among the reasons given by Bernanke for the reduced potential growth rate, excuse me, the extraordinarily severe job losses that followed the crisis, especially in housing-related industries, may have exacerbated for a time the extent of the mismatch between the jobs available and the skills of and locations of the unemployed. The epidemic of long-term unemployment that has led to some loss of skills and moved some of the jobless out of the job market forever. And thus, as a result, the rate of unemployment that can be sustained under normal conditions may have been pushed up, and the fraction of Americans who are working or looking for work may have been pushed down. I just want to read you what he said specifically about our upcoming fiscal challenges. What are these looming challenges? First, the Congress and administration will need to protect the economy from the full brunt of the severe fiscal tightening at the beginning of next year that is built into current law, the so-called fiscal cliff. The realization of all of the automatic tax increases and spending cuts that make up the fiscal cliff, absent offsetting changes, would pose a substantial threat to the recovery. Indeed, by the reckoning of the Congressional Budget Office and that of many outside observers, a fiscal shock of that size would send the economy toppling back into recession. Second, early in the new year, it will be necessary to approve an increase in the federal debt limit to avoid any possibility of a catastrophic default on the nation's Treasury securities and other obligations. As you will recall, the threat of default in the summer of 2011 fueled economic uncertainty and badly damaged confidence, even though an agreement ultimately was reached. A failure to reach a timely agreement this time around could impose even heavier economic and financial costs. That was Ben Bernanke today on the whole problem we have with the fiscal cliff. Hewlett-Packard took a charge of $8.8 billion after writing down a software unit named Autonomy that it acquired last year, citing accounting irregularities. HP Chief Executive Meg Whitman said an internal investigation revealed serious accounting improprieties and outright misrepresentations with Autonomy, which is a UK software maker. Specifically, HP is citing revenue recognition issues. On Tuesday, company said it relied on Deloitte's audit of Autonomy and had hired KPMG for an additional review. Neither firm found any irregularities, according to Whitman. HP's internal investigation was launched after a senior Autonomy executive came forward this past May following the resignation of Autonomy CEO Mike Lynch. Ironically, Oracle talked of rejecting a potential acquisition of Autonomy last year because the market value then of $6 billion was, quote, extremely overpriced. That's what Oracle said. And then Hewlett-Packard went out and bought Autonomy for $10.25 billion. Oracle thought it was extremely overvalued at $6 billion. Hewlett-Packard bought it for $10.25 billion. But Hewlett-Packard has all kinds of other issues. For example, for the fiscal fourth quarter that ended October 31st, HP said revenue was down 7% from a year earlier, the fifth straight quarter of big declines. Revenue in the PC business fell 14% from a year ago, owing to the ongoing migration to tablets and smartphones. Sales to consumers were off 16%. And sales in the printer division, critical to HP, fell 5%. PCs and printers combined account for 50% of HP's revenues. Insider trading. A former hedge fund manager was accused of making $276 million for his firm, perhaps the largest insider trading case in U.S. history. Matthew Martoma used information about drug trials that had not yet been published. The doctor who gave him the information is cooperating with authorities. The money was allegedly made on trading in two companies, Elan and Wyeth, which were conducting trials of Alzheimer's drugs. Manhattan U.S. Attorney Preet Bharara said today, quote, as Martoma allegedly got sneak peeks at drug data, he first recommended that the hedge fund build up a massive position in Elan and Wyeth stock, and then caused the fund to shed those shares after getting a secret look at the unexpectedly bad results of a clinical drug trial. As a result of the blatant corruption of both the drug research and securities markets alleged, the hedge fund made profits and avoided losses of a staggering $276 million, and Martoma himself walked away with a $9 million bonus for his efforts. That was U.S. Attorney Bharara. Actually, the bonus was $9.38 million. Well, this case gets more interesting because the government was able to implicate mega billionaire Stephen A. Cohen, the founder of SAC Capital Advisors, LP, for the first time as Martoma's CR Intrinsic Investors was an SAC affiliate. Mr. Cohen wasn't charged or mentioned by name. As reported by the Wall Street Journal, he's referred to as Portfolio Manager A in an alleged $276 million complaint, the civil complaint that was filed by the SEC. According to the SEC complaint, Portfolio Manager A, Cohen, authorized many of the trades based on Mr. Martoma's alleged inside information and rejected the advice of other analysts at his firm that conflicted with Mr. Martoma's positions. They sold the shares and they also shorted some of the shares once they realized the news was not good on the drug trials. The neurology professor, Sidney Gilman, was chairman of the safety committee overseeing the drug trial and moonlighted as a paid consultant for a New York expert network firm, according to the Journal. Martoma, 38 years old, has been charged with conspiracy to commit securities fraud and 2 counts of securities fraud. Each fraud count carries up to 20 years in prison. One final note: at the Association of Southeast Asian Nations meeting, ASEAN, in Cambodia, it was China and Cambodia versus the other 8 members, with Japan and Australia in observer status. Cambodia receives a lot of aid from China, including of the military variety. 4 members, Vietnam, Philippines, Malaysia, and Brunei, are involved in international disputes with China in the South China Sea, and ASEAN hasn't been able to come up with a system for resolving these disputes. China wants bilateral meetings for conflict resolution, while the other players, including the U.S., want to establish a code of conduct aimed at minimizing the risk of a conflict and multilateral talks. So the summit wrapped up today, and it ended with an open clash between China and the Philippines over what is known as the Scarborough Shoal. Of course, Japan has its own issues in the East China Sea. So this is to be continued. President Obama went to the meeting. He met with Chinese Premier Wen Jiabao, but the South China Sea issue was not raised, at least publicly, and actually there was zero news made on the Obama front today. Well, that's it. I'll be back with you tomorrow, Wednesday. Keep the men and women of our armed forces in your thoughts and prayers. For more stuff, go to stocksandnews.com. I'm Brian Trumbore. Take care.